Welcome to the Technical Analyst channel. What is technical analysis? Technical analysis helps traders make decisions by analyzing past price movements and patterns. It's used to predict potential future movements. Technical analysis is built on a core principle that price reflects everything. This means that all available information, like earnings reports, news, economic data, and even investor sentiment, is already included in an asset's current price. The three key concepts in technical analysis are trend analysis, support and resistance levels, and volume. Trend analysis is simply the general direction of an asset's price movement over time. And it can be upward, downward, or sideways. In our example, it's an uptrend due to a series of higher highs and higher lows. Support and resistance are essential concepts in technical analysis. Support is a price level where demand is strong enough to prevent the price from falling further, often causing it to bounce back up. Resistance, on the other hand, is a level where selling pressure builds, stopping the price from moving higher. Volume represents the number of shares or contracts traded in a given period and is a key tool for understanding market interest and price strength. High volume during a price move shows strong interest and increases the likelihood that the trend will continue, while low volume suggests a weaker trend. That wraps up our introduction to the basics of technical analysis. We covered three key concepts: trend analysis, support and resistance, and volume. In our next video, we'll dive into popular indicators and candlestick patterns, so stay tuned. If you found this video helpful, make sure to like and subscribe for more trading insights. Thanks for watching, and see you in the next video.